All right, so ESG investing, right? We've got a ton of research on this, like a whole stack of stuff. Clearly, you're interested, and you're definitely not alone.
Yeah, no kidding. It's everywhere these days.
It really is. Financial news, social media, you name it, everyone's talking about ESG. But sometimes it feels like, are they even talking about the same thing? What even is it?
That's such a good point because there is a lot of buzz around it, right? I think that's why this deep dive is so important. You
Yeah.
got to cut through the noise and figure out, is it more than just a buzzword?
Right. So is it more than just a buzzword?
Yeah.
Because the idea of considering environmental, social governance factors, those have been around for a while.
Exactly.
Yeah.
Yeah, it's definitely not a new idea. I mean, we can actually trace it back to the early 2000s.
Wow. Okay, so early 2000s it's been building. But it does feel like something is different now. Like it's gone from this kind of niche thing to mainstream.
It really has. And I think what's different now is that it's not just, a fringe idea anymore. We're seeing a real shift in mindset.
Yeah, it's like we're finally waking up to the idea that a company's impact on the world, on the environment, on society, and the whole picture, it's not separate from its financial success, right? They're interconnected.
Exactly.
And in fact, I've even heard some people saying that strong ESG performance, it can actually predict or be an indicator of better returns in the long run.
Right.
What have you found in your research?
Yeah, it's interesting because there is a growing body of evidence that suggests exactly that. Yeah, that companies that prioritize ESG factors, they might actually be managing risks more effectively.
Okay, that's interesting. So it's not just about being ethical,
Yeah.
although that's obviously important,
Sure.
but it's also about the bottom line. It's about understanding that these things are connected.
Exactly. Think about it this way. So let's say you have a company that's proactively addressing, its carbon footprint.
Okay.
They're going to be less likely to get hit with future regulations or consumer backlash down the line.
Right.
And that's just smart risk management.
Makes them more attractive to investors too.
Exactly.
Okay, so it's not just about doing good, it's about doing well by doing good.
I love that. I'm going to steal that one.
Yeah, feel free.
Yeah.
But okay, so ESG, it's not as simple as just slapping a label on something, right?
You are preaching to the choir. I completely agree. It's not about checking boxes. This is about strategy.
Okay, so how do we make it strategic?
Well, I think it starts with understanding that ESG integration, it's not one size fits all. It's a spectrum.
Okay.
And a well-designed ESG framework, it considers not just a company's investments, but also its governance, right? How is the company run? How does it handle compliance? What about data management? All of these factors come into play.
So it's really about looking at the big picture. You're understanding how a company operates on all these different levels, not just the financial statement.
Exactly, exactly. And that's where things get really interesting.
Yeah.
Because there's no one right way to do this. Different investors are going to have different priorities, different values, and different ways of actually putting these principles into practice.
Okay, so ESG, it's about strategy, it's about the big picture. But how do you actually, put these principles into practice?
It's a great question. And I think for a lot of people, it can feel a little abstract at first, right? Okay, ESG, I get it.
Yeah.
But what does it actually mean for how my money is being invested?
Right, what are they doing differently with my money than they would with a traditional investment?
Exactly. So one way to think about it is like an ESG toolkit. It's a collection of different approaches that investors can use to align their portfolios with their values.
Okay, I like that. ESG toolkit.
Yeah, and just like any toolkit, right? Some tools are going to be more familiar than others.
Right.
Some might be better suited for certain tasks than others.
Okay, so walk us through this ESG toolkit then. What are some of the tools?
Sure. So one of the most well-known tools, and probably the most straightforward, is what's called exclusionary screening.
Okay.
And it's exactly what it sounds like, right? You're excluding certain industries or companies from your investment universe based on specific criteria.
Got it. So if I'm super passionate about clean energy, I might screen out any fossil fuel companies.
Exactly. Or if you're really concerned about human rights, you might avoid companies with, questionable labor practices.
Okay. So it's about kind of drawing a line in the sand.
Exactly.
Based on your value.
Based on your values.
Okay. But that seems like it could be pretty limiting. Doesn't that shrink the pool of potential investments?
It can, yeah. And that's why a lot of investors will use other tools in conjunction with exclusionary screening. So, for example, another approach is called best-in-class screening.
Best in class. Okay.
And instead of avoiding entire sectors, this approach focuses on identifying the leaders in ESG performance within each industry.
Well, that's interesting. So like even within, say, the oil and gas industry, there's going to be a spectrum of performance when it comes to like environmental impact and stuff.
Exactly.
And so investors are looking for the companies that are like at the top of the class.
Exactly. They're going above and beyond the minimum standards.
Okay, I see how this toolkit idea is working now. So we've got exclusionary screening, we've got best-in-class screening. What else?
So another tool that's really gaining popularity is what's called thematic investing. And with this approach, you're not just avoiding harm, but you're actively seeking out companies that are aligned with specific ESG-related themes.
So instead of just like screening out the polluters, you're putting your money into companies that are developing clean technology.
Precisely.
Okay.
So think renewable energy, sustainable agriculture, circular economy solutions. These are all examples of thematic investing in action.
So this is where it starts to feel like you can really have an impact, right?
Yeah.
You're not just like avoiding the bad guys, but you're actually supporting companies that are trying to make a positive difference.
I love that. Absolutely.
Yeah.
And, if you want to take that impact a step further, then there's impact investing.
Impact investing, okay.
Which really goes beyond simply considering ESG factors, but it's actually seeking investments that are intentionally designed to generate a measurable, positive social or environmental impact alongside a financial return.
Oh, wow. Okay. So this is where we're talking about investments that are specifically structured to address things like poverty or lack of access to clean water, education, things like that, right?
Exactly.
But still aiming to generate a return for the investors.
That's exactly right.
Okay.
So, a good example of that would be investing in a fund that finances affordable housing projects.
Okay.
Or one that supports businesses that are owned by women in developing countries.
This is fascinating. Okay, so we've covered a lot of ground. We've got exclusionary screening, best-in-class screening, thematic investing, and impact investing. Is there anything else in this ESG toolkit?
Yeah, there is one more, and it's a big one. It's called active ownership.
Active ownership, okay.
And this is where investors use their position to actually influence corporate behavior and to push for positive change from within.
I see. So it's not just about where you invest your money, but it's about using your voice as a shareholder to actually make a difference.
Precisely.
Okay.
And so this could involve engaging in dialogue with, company management, submitting shareholder resolutions, or even voting against proposals that you don't believe align with your values.
Now, you mentioned earlier that the EU was introducing some new regulations like the SFDR and CSRD to kind of bring more transparency to ESG investing.
Right.
Does that tie into this idea of active ownership at all?
It totally does. I mean, these regulations are all about making sure that companies are being transparent about their ESG practices.
Right.
And then giving investors the information they need to make informed decisions.
Got it.
It's about empowering investors to hold those companies accountable.
It sounds like this active ownership piece is becoming increasingly important as ESG investing moves more and more into the mainstream.
It is, yeah.
But I have to imagine that all of these approaches, this whole toolkit, it doesn't come without its challenges.
Right. You're
Yeah.
absolutely right. For one thing, ESG data, it's not always standardized.
Yeah.
Which can make it really difficult to compare companies, apples to apples.
Yeah.
And to assess their true performance on these factors.
Right. And then there's a risk of greenwashing,
Yeah.
which you mentioned earlier. And honestly, that's one of my biggest concerns with all of this. Greenwashing, right? Like, how can we be sure that these companies are actually like walking the walk when it comes to ESG and not just talking the talk to attract investors, like you said?
It's a huge issue, honestly, and you're right to be cautious about it because greenwashing can really undermine, the whole ESG movement,
Yeah.
And actually, one of the case studies you sent, it really highlights this problem. It focuses on the fashion industry.
Okay.
And you know how, terms like sustainable and eco-friendly,
Okay.
they get thrown around all the time.
So,
But then when you dig a little deeper, you realize that some of these brands that are, claiming to be sustainable, they're actually engaging in some pretty unethical labor practices.
oh no.
Or they're using materials that are, ultimately harmful to the environment.
So how can you tell who's genuinely committed to this stuff and who's just like trying to cash in on the trend?
That's where those EU regulations we were talking about, they come in.
The SFDR and CSRD.
Exactly. They're designed to create a much stricter reporting framework for companies,
Okay.
especially those that are operating in the EU. And the idea is to make it way harder for companies to make these like misleading ESG claims and to give investors, like you, much greater transparency.
More reliable data, basically.
Exactly.
To cut through the greenwashing and actually make informed decisions.
Exactly.
Okay.
Mm.
But even if you can trust the data, is there a risk that focusing on ESG could actually hurt financial returns? Like you're so focused on these other factors that you end up missing out on, like profitable opportunities.
Yeah, that's the million-dollar question, right? And it's funny you should mention it because it's actually a big concern. Like, it's called the value destruction risk.
Right.
And some critics argue that it's a real danger for ESG-focused investors. But here's the thing. I think the research is starting to paint a more nuanced picture.
Oh, really? In what way?
So, for example, there's JP Morgan Asset Management. Have you heard of them?
Yeah, of course.
Okay, so they're a huge firm, right? And they actually integrated ESG factors into 97% of their actively managed assets.
Wow, 97%, that's almost all of it.
I know, and we're talking like this was back in 2021, but it was something like $2.4 trillion.
That's a lot of money.
It's a ton of money, but that's not even the best part. Not only have they not seen a dip in returns,
Okay.
some studies are actually showing a positive correlation.
No.
Yes,
Got it.
between ESG performance and financial performance over the long term.
So it's not a trade-off, like you can actually do well and do good at the same time.
That's the idea.
That's amazing.
And you know what's even more interesting?
What?
We're seeing this play out across different sectors, like we were talking about Microsoft before, right?
Yeah.
Their commitment to becoming carbon negative by 2030, it's not just good PR.
Right.
It's smart business. They're attracting customers. They're attracting investors who care about sustainability.
Right, so it's like ESG is becoming a competitive advantage.
Exactly.
Interesting.
And that actually brings us back to something we touched on earlier, the healthcare sector.
Yes.
One of the most fascinating aspects of ESG in healthcare is how it makes us really think about the social impact of these new technologies and new treatments that are coming out.
It's true. And that's something that I definitely want to dive into a little bit deeper here because, healthcare is such an important part of my portfolio.
Of course.
And it's something that I'm really trying to learn more about.
Mm-hmm.
So what are some of the key ESG considerations in healthcare that really stood out to you from the research?
Yeah, so I think as technology and healthcare advances, there's a real risk of kind of exacerbating existing inequalities.
Okay.
Right, so think about personalized medicine.
Okay.
It has incredible promise, but it also kind of raises these concerns about access and affordability.
Right. So will these cutting-edge treatments only be available to the wealthy? Or can we make sure that everyone has access to them?
Exactly.
It's a huge question.
Huge question, and these are the kinds of questions that investors are grappling with right now.
It sounds like ESG in healthcare, it's about more than just the bottom line,
Yes.
It's about making sure that innovation benefits everyone, not just a select few.
And I think it's a fantastic example of how these ESG considerations are really shaping the future, And not just the future of investing, but the future of entire industries. It is a constantly evolving landscape, but the main takeaway for me is that ESG is here to stay. This is not a passing trend. This is a fundamental shift in how we think about value creation, risk management, and the role of business in society.
Wow. I think you've given us a lot to think about today. You've really demystified ESG investing, showing us that it's not just about buzzwords, but it's about making these informed decisions that actually align with your values and your financial goals. And I think you've also reminded us that this is an ongoing conversation, right?
Always evolving.
Yes.
Yeah.
And the more we engage with these issues, the more we can hold companies accountable and hopefully drive real positive change.
Well said.
So if you're listening to this deep dive and you're feeling inspired to learn more, don't stop here. Dig deeper. Look into the companies you're invested in. Explore those EU regulations we talked about, the SFDR, CSRD, and keep asking those questions because your choices as an investor and as a consumer, they have the power to shape a more sustainable and equitable future. And that's something worth paying attention to.